Good evening to one and all present here today. Fed has announced a 25 basis point increase in interest rates. Chief Investment Officer Mr. Sunil Damania will be providing his view on the impact of the Fed's rate hike on the Indian stock market. Towards the end, we'll also be having a Q&A session. You can drop in any queries you have in the Q&A box below the video. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome. First, let me apologize yesterday that our budget analysis, we did face a technical issue, and due to that, there was a stoppage of the live streaming of the complete webinar. But what we have done, if you are interested, we have put up that link on the site, and if you want, you can please ask in this, and Jason will be more than happy to share that link where you can view our complete analysis on the budget, very exhaustive analysis we have done. And I must tell you that I'll take one more minute before I start on the topic, that there is nothing negative in the budget. On the contrary, this budget is excellent. Whatever the damage that we saw yesterday in the market was mainly due to the Adani Group, nothing to do with the budget. So do not attribute that to the budget. We strongly believe that what government has done in terms of reforms, in terms of fiscal discipline of 5.9% to GDP, 10 lakh crore capex, 3.3% of the GDP, the revenue projections, they are all very much in line. Nothing to basically worry at all. And in fact, this budget is going to make India future ready. Why? Because we are going to invest in those technology where India could be far superior to the other parts of the world. And I think it's a budget in the right direction. And hence, I would request you don't attribute yesterday fall to the budget. Now, there are a couple of events that came back to back, which India has to really go through. We saw a debacle in the Adani FPO, Adani Enterprises FPO. Then we had budget, and market was a little anxious about capital gain tax. Nothing has been done there, no tinkering there. And number three, the Fed policy actions, and market were a little nervous what would happen, what commentary Jerome Powell is going to give. So today I'm going to discuss about what should be your strategy post a Fed policy action, and I must give you very good insights about what Fed is saying. Fed is making some new statement now, which were not there previously. And I think it's also surprised me because I've been reading, following, if you remember, every time when Fed comes out with the Fed policy action, we do an exclusive webinar. And this is the time, I think the Jerome Powell has given a very, very new perspective or new information in the press conference that has happened. So I'm going to discuss, and please listen to me very, very carefully. But before I start the webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indicator for future returns. Having said that, if you remember, we have a very bad habit of making prediction. Am I right? And we also predicted on 15 December 2022. Okay, what would be the quantum of Fed rate hike? There are some of you basically did mention on social media that I was 100% right. But let me play that video. I'll request my colleague Jason to please play that video and see how precisely we have given an indication what would be the rate hike on 2nd Feb or on the 1st Feb 2023. Let's listen to that video first.
Yeah, let's rewind.
For 1st Feb, we believe that Fed is going to do 25 bips rate hike. This is our prediction for the Fed rate hike. And as you all know, that's the kind of analysis we have. It's hiked the rate of interest by 20 fips. If you remember, every time we have been making prediction, how much rate hike should be there? 50, 75, and so only once we went wrong. I went wrong. That was on 2nd November. I was expecting 50 bips. Fed surprised me with 75 bips. Otherwise, in December, we did predict in November, in December, there would be 50 bips, right? And in December, I said, in Feb, it would be 25 bips rate hike. And of course, I'm going to make one more prediction today. in front of you, what would be the rate hike on 22nd March 2026, because that's when the Fed will meet again and declare their policy action. So let's try to understand what happened to the market yesterday because of this. And I would like you to please look at this data very carefully, because this has a meaning when I come to the later part of my presentation. Yesterday, S&P 500 post the rate hike, it went up. So normally the rate hike happens somewhere by, I think, 11 or India time 11, so it must be what, 10:30 or something. And from there, it went up. The overall market went up by 1.05%. Nasdaq, just see the difference. S&P 500 is 1.05% up. Nasdaq went up by 2%. It did move down, if you can see there, and then it recovered very smartly, 2% up. And Dow is almost at the same level. There is hardly any increase. I want you to remember this data point. Why? Because it's a very meaningful message it conveys, and I'll come to this little later part of the day. So, all three indices in the US yesterday moved up, even though the Fed hiked by 25 bips rate hike. And if you look at it, the moment every time there has been hike, this is a summary of what is happening in last 4-5 rate hike which has happened with Fed, how Indian market perform and how the US market perform. If you look at it, the 3 last rate hike was completely negative for the market for that particular day. Am I right? Whether it's on S&P 500, whether Dow Jones, whether Nasdaq or Sensex and Nifty. But this time, there is no negative. So that trend has been broken. जो 3 बार जो हुआ था, rate hike and market went down, that did not happen. So that trend got broke. And it's a very meaningful message there. So I'll come to that little later, but that's the thing. Just remember now. So what is Jerome Powell is indicating? And this is all I've taken from the press conference that has happened. I've tried to understand, because always the way Jerome Powell speak, it does gives me an idea what we should expect in the next rate hike. So let's try to understand. I must tell you, Jerome Powell's view are quite contrary to what my beliefs are or belief is. And hence, first I'm saying what Jerome Powell is indicating, not necessarily I subscribe to that view. I again repeat, not I subscribe. Fed is going to maintain the restrictive stance for the policy. It strongly believes the job is not yet finished. In other words, there would be more rate hike in the process. Now, when the question was asked to Jerome Powell, he said, I'm expecting there will be at least couple of more rate hikes. Couple of more rate hikes. If you remember last time I did predict that Feb rate hike would be the last one. Do I still maintain? I'll come to that. But the Jerome Powell is not only saying that. He's saying couple of more rate hikes. This one is going to happen. Another good thing, which is said, if you all know that, and we do have some investors from Canada, so they would relate to what I'm saying. The Bank of Canada took a stand that we will not do the rate hike, and we will reassess the situation when the next time when we meet, and if need be, then we will do the rate hike. So hike, pause, and maybe then, depending on the data, up or down movement. Got it? That's what the Bank of Canada, which is US neighbor. Jerome Powell doesn't believe in that strategy at all. What he says is that there will be rate hike, there will be pause, and then there will be decline. Okay? He's not talking about pause and then further rate hike or down. He's very clear. He doesn't want to follow the footsteps of Bank of Canada. That's what it is. So remember, this is very important thing, because once he pause, we should not expect rate hike. That's what the message is giving very clear cut. While the Bank of Canada says, I may take a pause, but then beyond that, I'm not giving indication to you people whether it will go up or go down. Here the Jerome Powell said, when I pause, then it will only go down, rate of interest. That's what the message he's willing to give us. The one pain point, and I think that's why, if you remember, every time when I do this webinar on this topic, Jerome Powell, for him, the one thing which is he's still not getting comfortable is the labor market. And if you remember, I don't know how many people understand JOLTS report. Are you aware about JOLTS? Have you heard about this? It is nothing but this just got released yesterday morning before Fed policy action, which is job opening and labor turnover survey. Now, what this JOLTS report basically jolted the market, and despite the market yesterday went up. So that's why I wanted to listen to you. Need to connect the dots. What I'm saying, you need to connect the dots. The JOLT report yesterday which came out, which clearly showed the job market is very, very strong. Why it is strong? Because job opening were at 11.01 million, that is 1.10 crore job opening, which is very strong. Last month, that is in December, it was 1.046. So that means the number of job openings will increase as compared to December to January, which is not what Jerome Powell wants. He wants unemployment rates to go up. And he wants to bring in the balance between the demand and the supply in the labor market. And what was the market consensus was? Only 1.02 crore. So 1.02 crore, which was expected to be the job opening, in fact, it moved to the 1.1 crore. Jerome Powell continues to believe that there is an imbalance in the labor market. Okay, and hence is not willing to budge or taking a pause on the rate hike. That's what. And he wants more data to come in. If you look at I'll present this, the inflation started coming down substantially in the US from 9.1. The latest data which came out, I think 6.5. And yet, Jerome Powell is not convinced. That should he basically believe that there is a trend is downward more on a sustainable basis. On the contrary, he believes that some of the inflation which has come down may start moving up, and I'll come to that. And one thing which is still a little, which will have some lag effect, and those who are from US would appreciate what I'm saying basically. So the housing service market, which is nothing but the lease rental, which is continue to remain higher. But the Fed does believe that the new lease agreement that will come for renewal, that would be signed at the lower level, and that could help to bring down the inflation to some level. But yet, still it is not reflecting in the CPI data. The another thing which I think Jerome Powell made a first time in last 6-7 policy, he did not mention, but he's saying, he talk about the core non-housing services inflation. This is housing inflation. Housing market is a housing service sector. He's saying non-housing, core non-housing service inflation is continue to remain sticky. He did not see any disinflation in that core non-housing service, which accounts for almost more than 50% of the core inflation. And since it does not see that in disinflation, he is in a no mood to take a pause in terms of rate hike. And I think this is a very critical data he talked about first time. But that's not the only data he talked about first time in this. He said, there is a fear, बोलते ना, एक कहावत है हिंदी में कि दूध का दाजा हुआ दूध का जला हुआ छाछ भी फूक फूक पी के पीता है. Once bitten, twice shy. That's in English. The Fed has observed in the past that they were too little early to stop the rate hike, and it's completely taken away the effort they've done previously. So, somewhere, I also get a sense that Jerome Powell is playing too safe. He's extremely cautious. He doesn't want to basically, he may err on in terms of tightening too much, but he doesn't want to err on tightening too early. It's not what we call removing restrictive policy too early. That's what he basically doesn't want. He said, I continue to believe it's very difficult to manage danger of doing too little and discovery in 6 to 12 months that we are near but did not get the job done. डूबी जब दिल की नैया सामने थे किनारे. He doesn't want to do that. He doesn't want to take the chance of inflation bouncing back because if he stopped doing it, there is a danger that he feels that I was so near but I could not complete the job. And that's another reason Fed is playing very, very safe. Better be safe than the sorry. US debt ceiling, he said, and that is his opinion, that I think that a lot of people would ask me, so I'm putting this in my slide, that Congress is going to raise debt ceiling. So even if you are going to ask me, I must answer that question, this one. But one more thing he said, and it has come as a big surprise to me. Of course, this data I was also not aware about, but that's what he's saying. The Fed believes that what has happened is that goods inflation has started coming down. Core non-housing service. Remember the goods and service. I'm talking about the service. That inflation is very, very sticky. The good inflation has started coming down. But Jerome Powell believes that's only a temporary. He believes that by mid of this year, that's the middle of this year, it will start rising. I again repeat, the goods inflation which was started declining, he expects that to start rising by middle of this year. So if your your core non-housing sector services is going to remain sticky, your good inflation is going to rise, then the situation is not so great, am I right? Because then where would this inflation will come down? And one more thing he said, that lot of states and the government, local bodies are flush with the funds. And they might give either a tax concession or dole out the checks. And that could further increase demand for the products and services. So he does not believe that there will be recession in the US economy. He said, yes, the pace of growth will come down, but he does not believe that economy will have a hard landing. And he claimed that a lot of state and local board governments do have a surplus revenue, and they might control tax cuts or payment dole out. And hence, he rules out hard landing for US economy. Now, why am I making a statement which is very important to understand? The moment there is a fear of hard landing, Fed would have put a stop on that, break लगा देता वो. पर यहाँ पर तो उसको है ही नहीं, expect ही नहीं कर रहा है. He continues to believe there will be a soft landing. So for him to put a pedal on the brake doesn't arise only because the assumption में नहीं है उसका. Am I right? That's what he's saying very clearly. Now the question would come, in these data points, should you expect more rate hike? If you remember in my December commentary, I did say Feb most probably would be the last one. And I did mention that joker in the pack could be China. China did open up, remember. When I made the presentation on 14 December, the China did not open up this zero COVID policy, tolerance वहाँ पे नहीं था. Now China is still a joker in the pack. We don't know what's going to happen with China. Am I right? Right now, what we call the holiday season is on. What kind of infection, what will happen? No one knows. But going by the language, I'm changing my opinion. And I'm saying so. That on 22nd March, Fed would do one more rate hike of 25 bips. I'm changing my view. I did mention that Feb would be 25 bips rate hike and that would be the last. 25 bips rate hike हो गया Feb में and I'm anticipating another 25 bips rate hike. That is. But one more thing he said, which I don't agree with him. And that's why I said in the beginning of this webinar that there are certain predictions done by Fed. I don't believe in that. He said that there will be no rate cut in 2023. And I strongly believe and I continue to believe there will be rate cuts in 2020. So me and Jerome Powell do have a difference of opinion in terms of rate cut or not. Am I right? Now let's look at the inflation of US, which I was talking. 9.1 is came down to 6.5. The comfort level is 2%. And whether that 2%, there are two things which Powell has been saying. He should get convinced. He is not going to wait till the inflation to come down to 2%, but he should get convinced that inflation will go down to 2%. That's point number one. And point number two, he's saying that there should be a balance in the labor market between demand and supply. These are two. Inflation is coming down. I do expect inflation. Of course, the prediction is either that inflation will go up in the month of January. We need to wait and watch what happens there. If it does goes up, it's going to make life more miserable for the other central banks across the world. Because if the Fed hike the rate of interest, there is a sheer pressure on other central banks to protect their currency to hike rate of interest. And I think everyone has to move in a unison to see that the impact is little low on the global economy. So we do expect, there's a prediction that I'm saying 25 bips rate hike on 22nd March 2023. That's the next. See, we were right on this part. We were wrong because we were expecting 50 bips. 75 bips rate happen. We had predicted 50, that has come true. We have said 25 bips. So out of 4 times, or maybe on 27 July also, I think I had predicted 25 bips, 75 bips. So out of 5 times, 4 times we have gone right. 1 time we have gone wrong. So maybe 80% success rate and only 20% failure rate. What happened to the rupee this time? Because rate of interest when it goes up, it does create a pressure on the rupee. And from last rate hike to till now, the rupee is actually appreciated by 1.4%. So last rate hike did not impact the market so much. And we expect something similar to happen with this 25 bips rate hike also. We don't expect rupee to come under pressure. Of course, RBI is going to come up with the policy on 8th and we'll get more clarity on that. This is how the market behaved over last 4-5 this one. So what should we do? What should be our now strategy? Couple of events are out of our way. Adani FPO is out of our way. They are going to return the money. Budget is already come and gone. Fed policy action is done. I do get a sense that market is no longer as anxious it used to be maybe 6 months back with the Fed rate hike. The same way when the corona hit us, we were all anxious, am I right? Abhi corona is no longer an issue that no one wants to. So I think market has taken its stride कि होते रहने वाला, चलते रहने वाला है. Now Fed policy action is not going to impact the market sentiment in India or the US. Now I was talking about that Nasdaq 2% up yesterday. Why it's very critical? Why it is critical to understand that connecting the dot is that previously whenever the Fed is going to hike the rate of interest, Nasdaq used to fall substantially, inversely proportional because it's a growth stock. So when the rate of interest goes up, the growth stock valuation comes down. The very fact that Nasdaq went up by 10% in the month of January clearly suggests that risk-on strategy is there. And why the risk-on strategy is there? Because market has started discounting that the pace of rate of growth from the Fed would be low, number one. Number two, market still started budgeting that there will be a rate cut in the second half of 2023. And due to that, Fed rate hike or Fed, maybe who knows, maybe we'll do one more webinar on 22nd March on the same topic, and post that we may not do it only on same topic. Why? Because it's no longer matter to the market. So Fed rate hike is losing its importance in terms of creating volatility in the market. Something similar is happening with budget also, India budget also, where budget is no longer makes market nervous, and hence due to that, the movement in the due to the budget in the indices is reducing day by day, year by year. Inflation, as we all know, is coming down. At least in India, it has come down. I think that's another good factor that market is not too much worried about the Fed rate hike. Now, what would happen? Once event gets over, market wants something else to discuss about. Am I right? Adani ka episode, of course, it will continue for one more week or something, but that's not going to linger on for a longer period of time. Budget is out of the way. No one will discuss about budget next Thursday. And Fed rate hike is also out of the way. So ये सब event हो गई है. तो market will now go back to the basics. What is the basics? Earnings growth. And earnings growth has been really good. If you look at the quarter-on-quarter sales growth of 1.4% and net profit growth of 16.1%, so I think it's a very good thing. That's one thing. Budget में कोई negative news नहीं है, so that's not going to impact the sentiment. In fact, it's a good. Adani Group will have some collateral damage. मैंने लिया होगा या किसने लिया होगा, that guy would be forced to make good those losses because that's why. And it could create a collateral damage in the market maybe for 6 to 7 days more. Not only on Adani Group companies, some other companies also. So we need to be wary of that. But this crisis is giving a very good opportunity for investors to make more money. How? By investing more in the market. And hence, every fall in the market should be used as an opportunity. If you remember, I did mention on 30th Jan, am I right? Jason, I was 30th Jan only, no? Market went down. I bought from the market, in the market. Why? Because it gives me good opportunity to buy. And hence, my request to you, don't get carried away by that commentary from other experts कि market में panic होगा, इसका collateral debit बहुत ज़्यादा होगा because Adani Group नहीं कुछ होने वाला है. The fundamental story of the India remains very, very strong, and I do believe FIs will come back very strongly in the Indian equity market. Very strongly, despite they have sold very heavily in the month of Jan, they will come back very strongly in the Indian equity market purely because the valuations are good, growth in earnings is there, and hence there is no reason why this should not come. There is one more thing which I must tell you that you could see some divergence happening between Nifty and Sensex. And why is that so? Reason is very simple. Adani Enterprise is a part of Nifty, but it is not a part of Sensex. And Adani Enterprise have gone down by as much as 60% in last 1 week or so. And that's why you could see some little divergence between Nifty and Sensex. The reason I'm saying this information, in case if you're investing in ETF, you know where you should be parking your funds in ETF. That's the reason insight I'm giving you. With this, very quickly, we do have an offer of 26,999 for 2 years, which comes with additional 3 months. And of course, I did mention that mutual transactions are going to get launched in the month of January. It got little delay by 1 week or so, but it's definitely, of course, I have invested through this mutual fund transaction platform of ours, and it went through very smoothly without any glitch. But we still want to be doubly sure before we make it live. So it's already live for our internal members, and we will make it live for all of you very soon. And this package of 26,999 does include this mutual fund transaction, which comes free of cost. With this, let's open the floor for question answer. Over to you, Jason.
Okay, this first question, which is by Abhishek. Dear Sunil, how long will this Adani fiasco go on for? What should be our strategy to safeguard our interests?
It's very simple, Abhishek. Please stay away from the group. Why? Because you don't know how much low it can go. Don't try to do bottom fishing, my advice to all of you. It's not a very good strategy to do that. Even if you get tempted, don't do that, because the risk reward is not in the favor of reward. That's what my personal opinion. What should be a strategy? I think one Adani episode will, in a way, market will start looking at a group where there are no even a 1% doubt about the corporate governance. So what is going to happen is that some of the good quality managed group will come back in demand. Some of the sectors where the corporate governance issue is a very, very gold standard, like IT, for example, they will come back in demand. At the same time, some sectors like real estate will come under a lot of pressure, because there's still, people still don't know what is there. And hence that could be a reason. So I think you need to be very, very careful now when you invest in a company, whether there's even a single doubt about the quality of that group. And if yes, it's rather be stay away. उतना टेम्पटिंग लगेगा आपको पैसा बनाने के लिए, अच्छा भाव में मिल रहा है, प्लीज स्टे अवे. दैट्स व्हाट. सो आई नॉर्मली एडवाइज व्हाट आई वुड डू on my personal money. And something similar I'm advising you. I will not do. I will rather make less money, but I make sure money on the corporate house, which have a gold standard on the corporate governance. It's a different story whether their corporate governance standard is good or bad, but sometimes the perception itself creates a lot of havoc. So I'm not saying this group is bad, corporate governance, and this group is good. What I'm saying, the perception matters. And in market, my perception matters a lot. Am I right? So that's what my advice would be.
Okay, going to the next question by Mr. Perujag. He says, so will the soft rate of 25 basis point influence RBI to pause the rate hike?
No, sir. I do believe that they will do one more rate hike on 25 bips. And if in March, which I'm predicting, that Fed is going to do rate hike, I think it will also create a pressure on RBI to keep, because they need to protect the rupee. The higher the rate of interest in US, lesser the chance that someone will come down to India to put money. Because वहाँ पे तो आपको risk free return ज़्यादा मिल रहा है, तो why would you then come to country like India if the rates are not good? So that could create a pressure. So do we expect on 8th Feb RBI to hike rate 25 bips rate hike?
Okay, moving to this next question by Pankaj. Post-budget, what's your view of defense stocks, as defense budget has not come to expectations?
So defense is not a story of 1 year or something. Defense is a story of multi-years. Why am I saying so? Because government want to make, listen to what government has said very clearly. They want to make defense, exports of defense is a very big thing. And government want to make Atmanirbhar Bharat in defense, and also exporter of defense to our neighbor friendly neighbor countries. So I think it's going to do extremely well. Bharat Dynamics, Hindustan Aeronautics, there are certain other companies which we own in our Infinity Mojo model portfolio. We have not exited from any of them. BL, there was some concerns about they supplying some products to Myanmar, and one of the sovereign wealth fund did get out of that company because they have issues with Myanmar being supplied weapons and so. But I think, defense we continue to remain bullish on.
Okay, I'll pick this next question. This is by Mr. Mahindra. He says, what's your view on the cancellation of FPO by Adani? Whether Adani stocks would still be under pressure, as it may not be able to repay the huge debt which was planned through FPO funds.
So if you look at the object of the FPO one was to fund the new venture that they have, and some extent to repay the loans also, you're right. We all know yesterday night they announced cancellation of FPO, and today Adani Enterprise was down by near about 26% or so. That clearly gives an idea that I think market is not little comfortable, Mahendra ji. And that's one of the reasons someone when asked me, Abhishek asked me about that question, I did mention that right now the good strategy seems to be don't do bottom fishing, even Adani Group company, because we don't know what is stolen. क्या होने वाला है किसको पता नहीं है. Market is not in a mood to accept the explanation from the Adani Group. Otherwise, it would not have fallen so much. And sometimes market wisdom is the supreme. So we need to. So my advice would be, and there could be collateral damage also to other companies also. Why? Because sometimes to make good the losses, you need to get out of some of the blue chip companies also. But that can happen for next 7 to 10 days. Beyond that, I think market will start looking at the other part of the story, which is the fundamental side of the story, and it will move on. What happened to Adani Group? My sense is that they may continue to remain under pressure, and hence I am not advising you to do bottom fishing.
Okay, moving to this next particular question. This is by Mr. Vikram. He says, Sunilji, Axelia Solutions was highly recommended by you, but it's going down every day. Should we accumulate, hold, or exit?
See, so there is no change in the story of the Axelia. Okay, the number did not came out as much as I was expecting it to come out. To be very frank with you, and manager did not offer any explanations also why the numbers did not come out as good as we were expecting it to be there. So yes, it is down by near about 7% or so in last 1 week or so. Should you buy more? Answer is no. I'll be very frank with you. But don't get out of the company which you already bought it. The reason I'm saying don't buy more because our IP suggests it's a hold, not a buy.
Okay, we've got this question by Mr. Kevin Patrav. He says, on a lighter note, when will the prediction come through on portfolio returns? The predictions are nowhere as close as of now. I'm trying to keep faith as it is easy to say the future is always bright.
So, Kevin, you are right that, see, the market has been extremely choppy. You need to, other day, my daughter was asking me, Ajay, Surya Kumar Yadav ko T20 mein, why he has been given man of the match with such a low score. He has scored only 25, 30 runs. And yet he has been given, and it's not that the strike rate was high. And I said, circumstances under which he has scored the runs, I think that amount accounts a lot. And hence he was given man of the match. The same way when you look at the portfolio returns, is if you need to look at the surrounding, the environment under which it is happening. We need to have patience, Kevin ji. We have seen improvement in the portfolio performance in the last 1 month. We have launched Passcode. I don't know whether, Kevin, you are there in that Mojo Infinity or not, but we have now launched a Passcode, and due to that, we have seen improvement in the portfolio returns. I'm going to make presentation tomorrow to our Mojo Infinity customers how our strategies work. And in last 1 month as a strategy, we have outperformed the benchmark. Something similar it happened in the month of December also. And it's happened in the month of January also. So 2 months in a row, our new strategy that we have done is showing the good result. And it will reflect in the returns to the portfolio. So please have patience, it will have. I know it has been, the wait has become a little longer, but it's worth the wait. That's what my advice would be, sir.
Okay, I like this one question by Anjali. She says, as per one of your webinar, the performance of Indian equity market is now no more coupled to FPIs and Fed policies. Then why are we giving importance in discussing the Fed policy?
Anjali ji, the reason why we discuss is purely because you people need this webinar from me to explain you why, what are the takeaways. Not only that, you also people want to know what could be the next rate hike, and which I covered in my prediction, what would be that. If everyone, in fact, I did make a statement, that maybe I may do webinar on the same topic, maybe on 22nd March, and maybe post that I may not do it also on this topic. Why? It doesn't matter. The reason we did that because lot of you people only suggested. We were not doing Fed policy. पे कभी करते नहीं थे webinar पे topic ही नहीं था. But you people suggested us. why don't you enlighten, why don't you help us to understand what should be our policy? So that's why we did that. If Anjali ji, not only you, but if other people also want that to be done, I'll be more than happy not to cover that. I do believe, and I fully subscribe to that view. I stand by my view that Fed policy action is becoming. In fact, I did mention in my webinar presentation also now that it's become a part of the system. तो भी ज़्यादा impact करने नहीं वाला है. It's become part of system, and thing which become part of a system, people then don't discount too much negatively or positively either way. Jason, are many people suggesting that we should not be doing Fed policy pay? If that is so, it's a good learning that maybe we can take a cue and we don't do it then.
No, not received many feedbacks as of now, but if any of you all have any opinions, please drop them in the chat box.
Yeah.
We'll have a look at them.
Please do that so that at least we get an idea, because we want to cover those topics which makes you people interested.
Okay, but I think many of the questions and the statements we're getting is about Adani groups and companies. So I'll pick this next one by Kirit Kumar. He says, is it possible that Adani Enterprises is removed from Nifty 50? Is there any criteria of entry and exit?
Yes, sir. There are criteria in entry and exit, and it can be removed if it doesn't satisfy the criteria in terms of liquidity, in terms of, well, of course, it will meet the liquidity criteria, but in terms of the market cap. And every 6 months, the Nifty 50 committee will meet, and every 6 months they meet, and then in that they will decide whether this company continues to satisfy the criteria to be a part of Nifty 50. In case if that happens, it doesn't meet the criteria, then it will be asked to, it will automatically go out. If it goes out, it could create more pressure. Why? Because those who are holding ETF, they'll be forced to get out of other enterprise from their portfolio. It could create more downward pressure on Adani Enterprises. Yes, I'm just searching when it entered Nifty 50. I'm just searching for that. Let's see. We'll get an idea. It entered in May 2000. It entered in September 2022. So March 2023. So still they are a couple of months away, and then so we'll come to know in next 1 month or so whether it satisfies the criteria or not.
Okay, this next question, I think the most asked question today. Many of the investors are talking about the valuation of Adani groups now. So Rasvik has asked, is any Adani share worth purchasing now? What's your opinion?
I did mention, sir, don't do the bottom fishing. Please stay away from Adani Group as we speak. There is no clarity, and right now, see, this logic of valuation, I think, will work in a normal case. Right now, there are little fear, and in those cases, the valuation logic doesn't apply. A fundamental logic doesn't apply. I think it's a poor sentiment, and the selling pressure that is coming in, that is defining the share price movement. So I think right now, don't try to do bottom fishing. Let the more clarity come, more data points comes in before taking any call on the Adani Group. So my advice would be please stay away. Don't do any bottom fishing.
Okay, and another question is that by Srinivas, should one exit stocks of companies and business contracts with Adani groups?
I think we need to be, there cannot be any one single answer that I can give you, depending upon who the company is, what the kind of product they have, what kind of revenue they basically get from Adani Group, and so on and so forth. It's a very various permutations and combinations that you need to look at it. So I don't think I can give an answer yes or no. I don't think this is so easy to give yes or no answer.
Okay, question by Karthik. Hi Sunil sir, how's your health? Is it fine? Also, please take care. Could you please provide your views on P-Notes access through GIFT that announced in budget, and whether it will pave way for more inflows since it seems to be zero tax?
To be very, even I read this article about P-Notes and the business line. I don't know, to be very frank with you. I don't have any opinion, Karthik ji, what would happen. But thanks for your, I'm fine actually. I have some infection in my eyes. That's really, and that's one of the reasons I could not do a webinar on 31st. So I had to take a rest. So I was at home and I did not come to the office also. And in fact, there were some reviews being lined up, which also I had to cancel. But I'm fine now. I think it's improving. You can see my eyes are now much better as compared to what it was yesterday. And even on 30th, this one. It's improving, sir. Thanks a lot for your concern.
Okay, so Durgesh has asked that, is there any artificial intelligence company in India? And also, is AI going to be a thrust area?
Of course, yes. Durgesh, which company? The MarketsMojo is an artificial intelligence company, and I think a lot of thrust is going to come in the budget also. They did mention about that, and if you should read to the Mohit's comments post-budget about artificial intelligence. So I think artificial intelligence is the name of the game, and what is Chat GPT is nothing but the artificial intelligence. So maybe, I was reading one article of, so every year, the Navneet Munot, who was with SBI, now is a CEO of HDFC Life. And every year he forward me his article he writes, which is Person of the Year. And every year he forwards me that he's Person of the Year, and I read it. He releases it in Jan only, every year Jan. And this time for him, he's written, you should read that, he writes very well actually. Navneet Munot, it should be available on HDFC AMC website, Person of the Year. You Google search and you should get it. And this time he wrote that Person of the Year is an artificial intelligence. And I wrote back to him and said, your conclusion is right, that 2022 is the Person of the Year is artificial intelligence. And I said for next 10 years, it would be artificial intelligence only. So I think the artificial intelligence is going to make life much more simpler and much more innovative. And I think Government of India realized that. So I think the artificial intelligence is going to begin the name of the game. You are taking in artificial intelligence in a listed entity. There are a couple of companies, not purely we can say artificial intelligence, but they are doing very similar to artificial intelligence. A company like L&T Technology, which basically does a lot of artificial intelligence in terms of the driver assistance and Industry 4.0 and kind of stuff. But out and out, I'm not able to recollect any company which is pure only into artificial intelligence and which is a listed. I may be not aware also. It may be there are some companies and I may not be aware, but I can't recollect if any company with 100% to artificial intelligence.
Okay, I've reviewed the chat box and we're getting actually a split into people who want the Fed impact webinar and some of them who don't want it. I think there's a good 50% split, but I think some of the comments says that Sunil sir, I think you should continue doing them as long as you think it's relevant for the market.
Okay. So, see, it's only give you the perspective from the US, how the US economy is going to do, whether there's a risk-on strategy coming back or not. So sometimes Fed policy action can also help us to create wealth. Am I right in terms of, and that's why we do it. But I think if it's 50-50, then I would rather go with the 50 who is saying yes, rather than 50 who is saying no. So I'm biased, let me tell you very frankly. But sometimes it's good to be biased.
Okay. Question by Kalpit. Reflex Industries displays good results for Q3 and is also into green hydrogen technology. It has a financial trend of 34 and is currently outstanding. What's your opinion on this stock?
So I'm not looking at the numbers to be very frank with you, sir. But today I think it's hit the upper circuit. In our system, it's a hold with the score of 68. So my advice would be to hold. The company has done extremely well in last 3 months and 6 months. There could be a possibility, I'm just saying possibility, that there could be some amount of profit booking that can take place. So right now, it's a hold, not a buy.
Okay, question by Mr. Balan. Greetings, sir. You may be aware of the fire incident in VIB Industries in Bangladesh. Hope there's no major damage or human loss. Do you have any views on this, sir?
Oh, sorry, sir, I'm not aware. And when this fire took place, I'm not aware. Good you brought it to my notice. I'm not aware that fire took place in Bangladesh. So they do source. I don't think they have a factory in Bangladesh. They do source from Bangladesh. So previously they used to source a lot of stuff from China, and then they wanted to move away from China. So they started sourcing more from Bangladesh. But I'm not very sure that they have a factory in Bangladesh. They may be outsourcing from Bangladesh. That's what my sense is. Yeah.
Okay, so we're getting a lot of questions about the Infinity Power portfolio. Mr. Pali has asked this question that could you explain about it and also how is it different from model portfolio? There's a 10 lakh entry now which seems a comfortable amount.
No, can you once again please explain about Mojo Infinity and how different from model portfolio it is 10 lakh entry which is a comfortable amount. So I think first the model portfolio and the Infinity portfolio run on a different logic altogether. Infinity now runs on a different passcode, which is nothing to do with the score available on the website. And this is power, infinity power is higher risk and higher return strategy as compared to even the aggressive model portfolio. So there are two basic difference, and in our model portfolio, we have certain limits in terms of market cap, sector, and so on and so forth. In our infinity power, there are no limits on the sector, and there is also no limit in market cap, except in power we can go up to 20% in small cap. Sorry, otherwise there are no, so these are the chain difference, and that's why return could be quite different as compared to model portfolio and infinity power.
Okay, question by Rao, where thousands are being laid off, how is the labor market stable? Could this reflect in the months to come?
So I think what is happening is that there is a noise and there is a reality. The noise is that too many layoffs are happening in some of the tech companies and non-tech companies also. But the jolts, that the data that came out from the US clearly says that job market is very, very strong. And if someone from US who can basically also concur what I'm saying, but the data says it's very, very strong. In fact, the ratio continues to be 1.99. In other words, for every one job, there are two vacancies. For every 1%, two vacancies available. So that's very, very strong. Of course, the rate of the wage rate hike has come down, but the job market continues to remain very, very strong. So, despite people are being laid off, I think the job market, that the demand supply continues to remain a little imbalanced, and that's the reason why Jerome Powell is not committing that he's going to do rate cut in 2023. I just stand corrected. I just searching for the this one. You are right, sir. VIP do have a subsidiary company in Bangladesh, and that subsidiary has been there's a plant which was there has been impacted. That is on 31st January that has happened, and they did mention yesterday. But the price move, looking at the price move, it doesn't look like that is going to be a major impact. That's what my sense is. And there are no casualty that happened. That's what the news article says.
Okay, I'll pick this next particular question. So, Mr. Tapan says, I bought Axis Bank when it was strong buy. Currently, it's in hold. What should I do?
Continue to hold, sir. Axis Bank. We do believe that it should do well. So, since you already bought it, please continue to hold, sir.
Okay, Mr. Sunil, that's it with the Q&A for today.
So, thanks a lot everyone taking time out and attending. I again repeat, Fed is saying that there will be a couple of more rate hikes before they take a pause, but they are ruling out a rate cut in 2023. I do expect one more rate hike of 25 bips on 22nd March 2023, but I do expect rate cut in 2023 from Fed. Over a period of time, Fed policy action is making less and less irrelevant for the market sentiment point of view. And that's what is going to happen. So don't get too much jittery about Fed rate policy action as we speak. With this, thanks a lot everyone taking time out. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil. And for all the Mojo Infinity investors, tomorrow at 6 p.m. we will be having the monthly performance review. We'll be shortly sending you all invites for the same. Looking forward to seeing you all come for the events. Goodbye and have a great evening.